Okay, welcome guys to another episode of MEPS Speaking of Steel podcast. One that summarises 2025. We've got all sorts to look at, but great that you've all been able to join me. We've got Jon Carruthers-Green.
Hi Tom, thanks.
Good to see you again.
Yeah, and you too. It's been a very interesting year.
It's not long since we were in the studio just last month, but good to have you back in. Kaye, MEPS Head of Price Analysis and Forecasts.
Hi Tom.
Great to have you back.
Yeah, good to be back.
Good stuff. Hope you've enjoyed 2025 because you're about to reflect on it in depth. And Stuart, Head of Research. Good to see you.
Hi.
You looking forward to reflecting on the last year, or is it going to be a horror show?
Well, it's been quite a year.
It has indeed. It has indeed. So what we did is we had a similar format of podcasts last year, as Jon knows, because he orchestrated some of the polling of the team. We put together a list of the key drivers, key trends in 2025, with feedback from the researchers, and they've ranked those trends.
Yeah, and we're going to go through our top three today.
Yeah.
We had about 10 different categories that we asked them to sort of choose from, but they've really boiled it down to what the big stories.
Yeah, and there have been some huge sort of levers having an influence this year, haven't they?
Yeah, I mean, one of the ones that I was kind of expecting to be on the list was going to be Donald Trump, but
Yes,
he
yeah.
he didn't actually make the cut this year.
And he'll be angry about
It
it.
will still be, yeah. So I've name dropped him now, so hopefully it won't be too bad. But yeah, we're going to be talking about some of these other really big themes today.
Yeah. So before we get going, Kaye, just briefly, I mean, how would you sort of summarize 2025 in just a few words in the steel industry?
Eventful, I'd say.
Yeah.
I mean, there's been a lot going off. Trade protection measures, weak demand, and a roller coaster of uncertainty, I'd say.
Yeah. And Stuart?
Yeah, I think it's quite obvious from our research and the response from people that we speak to, at least in the market. It's been that word uncertainty has come up a lot, but also a roller coaster. You can see that in the pricing from the beginning of the year. Donald Trump affecting probably the pricing initially, and it came thundering back down again. But I think first and foremost, I think demand has been exceptionally, I wouldn't say weak, because there is comparisons back to last year, but overall, I think what you just alluded to, Kaye, CBAM, upcoming tariffs as well for next year, those type of external factors have played more of a part this year.
Well, don't give the game away. We're gonna run through our rank of the top three trends now, and we're gonna go through them in reverse order. So it build a little bit of anticipation. I suspect people might know what the big issues are.
It's all the things they've been telling us all throughout the year.
Absolutely, but certainly starting off, number 3 ranked by our research team was an economic slowdown, and it's something that we've seen globally, really, starkly aware of it affecting all markets this year. Jon, last year we did touch on this quite a lot, and it was very much focused towards China. So I'll come to you first. Is it still China underpinning all that now, or have we seen a more even spread of that slowdown?
I think there's definitely been a slowdown in each one of the regions. Different reasons, different timings, but each one of the sort of the big regions we're looking at, Asia, Europe, North America, each one in their own way, there has been this sort of drop off in demand. If we're looking at Asia, we're looking at China really, and we're looking at those sort of big structural issues that they have there. We're looking at their aging population, their economy finally getting sort of fully developed status, and the natural sort of slowdown that brings. That's hit the real estate market there and has led to a drop-off in demand. That drop-off on demand, with it being so closely related to the steel industry, has had a really big impact on suppliers over there. So what they've then tried to do is they've tried to ship all extra material abroad. What else can they do? So we've seen exports from China increasing. But then we look at, say, Europe, and we've all sort of we're all living through this this sort of slowdown here ourselves. We look at Germany in particular, and their economy, which has been the driver in Europe for so many years, has had a terrible 2024, terrible 2025, and things aren't looking too good for 26. And then I suppose over on the other side, in North America, we've got uncertainty. That question, that word again, that's come from Trump and the tariffs, and basically the sort of the fireworks he's thrown into everything there.
Absolutely. And Jon, I must say, sort of fresh from doing the research for and summarising on a recent webinar about MEPS' steel price outlook, which looks forward 5 years. So we kind of reined ourselves in for this podcast, haven't we? But good work on that.
I thank you. Yeah, it was really interesting to finally sort of go through that and explain all of our findings, all of our reasoning in just a bit more detail.
Yeah, steel price outlook still available, and a really timely part of the year when people are planning for 2026. So hopefully we'll see people leverage that in the coming weeks. Stuart, I'll come to you because you're at the heart of the research team, getting a lot of feedback from MEPS contacts, and particularly I wanted to ask you about Europe. And we're talking economic slowdown here, but what we see it manifested as is a lack of demand, isn't it? You've already mentioned that. So what are we hearing from contacts in Europe?
Yeah, well, it's come across quite obviously during our research during the year, but it comes in waves. So 1 month it hasn't been consistent. So you'll get feedback such as it's been a great month, and then the following month, it's demand has fallen off the table. The inquiries haven't come in. The projects seem to be lacking. I think to try and sum it right through the year, I think that the larger projects that has been out there in previous years may be lacking somewhat this year. So everybody's feeding off smaller projects, and perhaps as well you get the situation, and I'm talking about the European context as well as the UK, that everybody's going for the same type of, or the same inquiry. It's driven prices down, definitely on the outsell prices as well. So although we get, for most part, that companies will tell us that their volumes have been stable year on year, the problem is profit margin has been under pressure. And with that, with rising costs, whether it's energy or other type of costs, I think that also plays a part. So the one thing that probably sticks out is that procurement strategies have changed in light of, say, the specific tariffs. I won't say Donald Trump's name again. Oh, I did. But the thing is that those had significant effects during the year. And especially those companies that import, they've had to seek other avenues. It has worked for some, hasn't worked for others. Others will say, we're going to continue the way we are. And if there is any additional price implications, they will cross that bridge. Mm-hmm. I'm not too sure if you can really criticize anyone or any specific strategy in terms of what they adopt, but certainly has put another angle in terms of procurement. From those companies that source locally from the domestic European mills, I think they realize that even though from a CBAM point of view, I don't think you'll get a response that, well, it's not going to affect us. But some will acknowledge that perhaps the steel mills will utilize that to their own advantage. And we've seen it already in the current research.
Yeah.
We saw it last month, coming into this month, and certainly maybe from July, it's been gaining momentum. And that will put pressure on prices going forward, upward pressure, I might add. Okay.
And Kaye, just to, I guess, summarise that section a little bit as well, but I wanted to touch back on the US economy, because it's been an interesting one with the I guess largely in response to the tariffs. But what has the overriding trend been through the year that we've seen from the US? I guess it's quite hard to summarise because there's been a few peaks and troughs, but from an economic point of view, it's been interesting to see what those effects have been.
Yeah, in the US, demand-wise has certainly been better than in other economies. Although when you speak to people in the US market, they have been maybe less optimistic because they, I suppose, see it just on a domestic level. They don't really compare it to in comparison to the other markets. So they see this year as being probably less strong in comparison to, say, last year. But overall, demand has held up okay this year in the US market. There have been some sectors that have outperformed and then others that have been not so good. So the data centers in particular have outperformed. So we've seen prices that are going into that sector doing well, like beams, for instance, and some of the other long products have done well where we've got less supply going into those markets. The tariffs have also put upward pressure on prices. And in some cases have helped the prices to not fall, despite some of the demand being weak in some of the sectors. So it's been one more of a supply-demand balance rather than necessarily, the demand coming down. And I'm sure, Stuart also speaks to people in the US market and has a good grasp on demand there. It's not been amazing. It's not been a great year, but it's not been as bad as elsewhere. I think that's probably the thing that I would say has been a summary of this year. And we've seen a bit of a price rally begin more recently in the US market. So things are slowly getting better, I'd say. And maybe, although 2026 is looking, still not as rosy, we're seeing some signs of potential positivity. Might be a stronger word than I maybe use, but some upward momentum on prices.
And we mentioned it in the Steel Price Outlook webinar. Clearly, it's been a delayed reaction from the Federal Reserve, but there have been some interest rate cuts later part of the year, and we expect that might continue now in coming months. I guess that's bringing some positivity as well for next year.
It is. I mean, and what you find with interest rate cuts is it does take a little bit of time to filter down into increased consumption. So, where Trump, without,
we're allowed to talk about it.
Bit of a tribute word. I know he wanted the interest rate cuts to come sooner and bigger. They are now starting to come through, and we're starting to see, the effects of that now coming through into the US market, and that will continue, going through into 2026. And there are, further interest rate cuts anticipated, next year. They're just probably not going to be as big or as often as probably Trump would like them to be. But they will have some impact on the US market. So, and we are starting to see that. And like I say, it's just not as bad. We're starting to see some onshoring on the manufacturing side and on the steel production side. So there are, positive signs in the US market coming through now. So
interesting. And there is that little bit of hope for next year, I think. So yeah. And don't worry, it was earlier in the Speaking of Steel podcast series, we were charging people to do press ups whenever they mentioned it. That's not the case now.
Although probably not a bad thing just before Christmas.
Absolutely, getting shade.
Tom, can I just come back to the European demand? So from what I was saying was more on the overall. I think it's been well documented with regards to construction, the industrial side, but maybe just to concentrate a little bit on the automotive side. If you take Europe as a whole, definitely a slight decline in the overall production figures, more so pronounced in the UK. And that really, apart from demand and offtake and so forth, the economic conditions really brought on about by the cyber attack. And
on JLR.
Yes,
on JLR.
correct. Yeah. And also we had a discussion earlier, definitely on the supply of the semiconductors. So I think, again, just trying to maybe point out that the European automotive production side isn't as great as what it could be. And I think just speaking to various research partners that are in that sector, it looks more of the same for next year, although there's always optimism, isn't there?
Yeah, absolutely.
I don't know. I'm not so sure there is. I mean, I'm thinking of when we go to conferences and we speak to people sort of directly face to face. I remember 2024 was a difficult year as well as was this one. But one thing that had when we saw people was, they had optimism. They thought 2025 could get better. Now, when we sort of ask them and to look, say, a year ahead, that optimism I don't think is there. Yes, prices will rise, but I'm not sure. So, say margins will rise. I'm not sure it's really going to get to a point where people are going to be sort of happy with the money they're making. There's going to be more of a rise, but more of these extra costs that are coming in.
Jon, I tend to agree with you in a way that certainly in current research there is a sense of optimism, but perhaps in the second half of the year. But I do agree, Jon, that if you take us a year back, that was the same type of sentiment. So, again, I think it all depends what the company and what focus they've got on in terms of what part of the sector that they supply to. For those that are in the contractual supply game, it's been a pretty good year, quite frankly. I haven't heard of any negativism coming back. It's those companies that perhaps are project focused or on a stockist type of business that perhaps have felt it the most. But overall, I think maybe the first 6 months is going to be really telling for the rest of the year.
Yeah. Well, listen, we'll move on to our our next topic. We've talked a little bit about the economic slowdown there and the influence on demand. Another thing that's had a huge influence on demand is CBAM implementation here in Europe. At least it's already had an effect, Jon, I think, on confidence in imports, the amount of purchases that have been taking place, and certainly the confidence among importers. There's so much uncertainty. It's been defined by uncertainty, really, CBAM up to this stage. And we're in December, and the taxes are going to be applicable from January 1st. So are you able to just give us a little bit of an overview on where we are with it now? What do we know? What do we not know?
Sure. So we've had the CBAM preliminary period go from October 2023, and that's going to run up until, like you say, until January, in just a few weeks' time. And during that period, everybody was had the obligation to report emissions data on all the material they're bringing into Europe. We get to January 1st, and it's no longer just a reporting game. It's no longer just extra paperwork. There will be an additional cost to this. So everybody's been trying to scramble around, trying to understand what this cost will be. And it's become a really big headache. It's a big headache because all of the important bits of information that you need to work this out aren't available. There's things like the European benchmarks is something that's has been published in sort of draft form recently. That's going to set sort of like the dividing line between clean and dirty steel. There's the price of carbon itself, which is the big multiplier in the whole CBAM liability game. There's getting actual emissions data from your supplier, which some people have found relatively easy, but a lot of people found it very, very difficult. And some people haven't even started doing that. Like I say, in a few weeks' time, these emissions will be charged. Okay, so there's a bit of a delay. That payment won't come due for another 18 months. But how exactly can you run a business without knowing all your costs?
The bills will come, but people don't know how
exactly
they will be.
Exactly. So the rules that set out exactly how much they're going to be paying, they haven't been written yet. They've not been confirmed. I think it's the implementation of this. It's an absolute nightmare.
So, I mean, Kaye, I'll come to you just to take your view on this. I mean, from the outside looking in terms of European legislation, there's an intrinsic benefit for domestic producers in Europe that this legislation is a bit vague to the last minute. And, you know, they generally they want things implemented sooner, and the clarification benefits them if it comes later. So with the lead times of imports, I guess there's already been that domestic producers will already have benefited a bit. Importers will have had headaches. What do we expect the start of next year to pan out like with this in the offing?
We expect import volumes to reduce drastically in the first half of next year, not even just the first quarter. The reason for that is the lead times from the likes of the Asian mills. I mean, if you're ordering now, realistically, you're not going to get it in the first quarter. And if you're an importer, even if you're importing now, you're not going to know what the CBAM charge is. I mean, we have seen some of the mills in Asia that will offer an import price inclusive of CBAM charge. So we are seeing those offers coming in because the Asian mills need the supply into Europe. You know, it's part of their volumes, and they've seen their sales volumes into Europe drop off considerably, you know, as CBAM's coming into place. So they're losing those sales, you know, from their order books. So they're having to compensate by offering CBAM inclusive pricing. So there's going to be a big drop in imports in the first half, and that volume is going to go to the domestic mills. So we're already hearing that the mills are, you know, instructing their customers that there's going to be a big price increase post Christmas. You know, we're hearing 30, 50 euros per tonne in January, possibly even more, and that's just going to be the start of it. So, you know, depending on how strong demand is, and as long as all the mills follow suit, I mean, it could just take one mill to break rank and think, actually, I'm going to increase market share rather than, you know, a price increase. It could be a very interesting start to 2026 and to see how the European mills actually cope with this increase in domestic order volumes. But yeah, we expect reduction in supply in general into Europe in the first half of next year because of all of this.
So I think that's an interesting trend that we're probably going to see. So already you've got the Incoterms of who takes sort of control of the delivery. I think we're going to see the exact same for who takes the CBAM liability, and I think that's going to be a big trend we're going to see next year.
Just quickly, Jon, one thing that I wanted to address with you. At MEPS, we try and make things as transparent as we can. We try and bring people news and information that will help them in the market as quickly as we can. We've seen a lot of numbers published about potential CBAM charges, often with huge scopes, you know, 20 to 200 euros, without any of these variables actually being confirmed at the moment. When all those variables that we do know about, the benchmarks, even the ETS, we know where that stands, there's still not going to be definitive numbers for people, are there? You're going to have to calculate on a case-by-case, mill-by-mill, product-by-product basis. There are no easy definitive answers with CBAM, are there?
That is exactly where it's going to end up. There are going to be a few shortcuts to begin with. So one of the big bits of information we're waiting for is something called the country-specific default values. So if you can't go and get actual emissions data from your supplier, you'll be able to use these default values. Now, what's going to happen is they're deliberately going to be set fairly high. And that's in order to sort of incentivize you to get the actual emissions data. Because remember, the higher these numbers are, the more you'll end up paying. So there will be some opportunity to use those, but that'll really put you at sort of like the top end estimates for any CBAM charge. It'll certainly pay to actually get that actual emissions data. And that's the bit where it is going to depend sort of on a case-by-case basis. Then we've also got the actual carbon price. So that's the bit you're going to be buying with your CBAM certificates. You're going to be buying a ton of CO2 that's being emitted. Currently, that costs you about 80 to 85 euros, but we're expecting that price to increase over the next couple of years. So it's really when the scheme really gets developed, it is going to be a case by case basis. The best anybody can do at the moment is give you a rough estimate with really big error bars.
Yeah. It's nice to feel on the front foot, but really, if it's not going to be an accurate, reflective figure, it's not that.
Yeah.
Stuart, I want to come to you because this CBAM uncertainty must be putting all sorts of strain on the steel market participants that MEPS talks to gather its research. What sort of feedback are you getting?
Well, you're 100% correct. I think frustration. I think no one can quite believe at this point in time there's no definitive value on it. I think, though, that our webinars on CBAM has gone a long way to educate not only our customers, but the market as a whole. So thanks, Jon.
You can find those on the Speaking of Steel.
But really, it started to really gain momentum, or start initially and gain momentum, say, from June onwards, specifically from July especially. And those respondents that we speak to that are involved in imports specifically, or those traders that are involved, it was as if they took a huge backward step at that time. And quite frankly, there was a clear absence of offers in the market at that time out of Asia specifically. It has now come back in. I think the Asian mills and those traders that deal with them decided, look, we cannot continue like this. We need to get these orders going again. And with the result that they're really covering those costs. And I won't give values here, but it's almost like an open checkbook. You cannot make an informed decision based on something you really don't know, and what the EU Commission hasn't actually put down in writing yet. So it's still a slight guessing game, although I must say that as each day goes by, there's a bit more information, and people are making their decisions based on that. But I mean, Kaye, at the end of the day, that has already had an influence on price, in the domestic price. The mills will take, I won't say advantage, but they'll see what the rising cost in terms of imports will be, and they will go accordingly, and obviously try to increase their price as well, which I may add hasn't always gone to plan for them. There is pushback. I just want to add another point. So attending the recent Black Expo, I did allude to it in the podcast back in October, but definitely at that stage, maybe slightly too early in terms of contractual conclusion of contractual agreements. And even now, they're still busy with that. And there is a thought that perhaps that will go into the new year. We saw it last year, very late, certainly in the month of December. And really, in terms of why that is, I think that word uncertainty comes in, and CBAM plays an important part of that.
Yeah. So at the moment, we're probably seeing more influence from legislation on prices than we are demand, certainly.
Absolutely. And I think that's going to continue for some time. I think that if you look at demand, there's no clear indication, and certainly in the markets where we look at, that it's going to rebound anytime soon. Although I must add, there was a little bit of a glimmer of positive things happening. If you take, for example, the manufacturing PMIs for November, you'll see that Italy's returned into growth. The UK even returned into growth. Those are the two highlights, but not too sure if that's an impact of maybe additional inquiries coming through because of the possible speculative effects that the CBAM may have. definitely that may play a part in that. So it will remain to be seen if that continues.
In the UK, it might come down to JLR having to ramp up production after that extended pause we were talking about before.
Absolutely.
We'll get on to the final and number one influence on 2025 as far as our researchers are concerned. I'm not sure if this warrants a drum roll, to be honest, because it's something that you would sort of anticipate is still a major influence on the market. But overcapacity, steelmaking overcapacity, and particularly rising protectionism in response to that overcapacity. All of what we've talked about in some way sort of plays into this overcapacity in some way. I'll start with you, Jon, but in the past we've talked about production in China. I mean, clearly by far the world's largest steelmaking nation. We're seeing a bit of a decline in the output there. Is that going to provide any respite at all in terms of global overcapacity?
So you're absolutely right. We have seen a bit of a drop year on year since I think it was 2022 where they actually sort of peaked their output. Now it's come down ever so slightly, a couple of percent, and the Chinese government is taking action to reduce overcapacity. It has tightened the rules on capacity replacement. So new plants that are being built, there has to be sort of an equivalent capacity of material of old plants being taken offline. Now, over the course of the years, they've increasingly sort of tightened the ratios for those, and also allowed for EAFs to replace blast furnaces. I'd fully expect these rules to get even tighter and even tighter. I think the Chinese government understands they've got this issue. But what we've also seen is that demand's dropped off so much more. So what's happened then is the overcapacity that's in China has ended up being available on global markets. So this is being exported at record levels. In 2024, it was a record year for exports. 2025 is going to beat that. And I'd certainly expect 2026 to be on very similar grounds. So what we've seen in response to that is there's sort of traditional method that you deal with this, which is sort of the anti-dumping and countervailing duties. We've seen absolute spate of those come across all over in Asia. Usually you saw them in America, sort of in the US. You saw them in Europe, in sort of Western economies. We see that a lot more in Asia. The second thing is things like safeguards. We've or call it Section 232, whatever you like. These we've seen now. India has started a scheme to protect their domestic industry. We've got the Europeans are going to go and tighten the rules for that. That's going to happen next year, so add that on top of CBAM. The US, we know all about the tariffs there. Canada, the UK will be doing the same. So all these barriers are going up in response to this.
And in Asia as well, there seems to be a lot more happening in China's neighbouring countries.
Yeah, it used to be that there was sort of, say, one or two, maybe a handful of them sort of every year. Now there is literally there is one a week. Now they're very targeted, so they're specifically sort of targeting a country and a product. So they have a limited effect. There's a whole process you need to go through in order to be able to sort of do this, and that's why we've seen people move towards sort of safeguarding as another mechanism that can be applied on a lot more broader scale.
Yeah, absolutely. But I guess the growth that we're seeing in overproduction, well, I say overproduction, India seems to be, as you'd imagine, really turning up its mills capacity. They seem to be consuming a lot more than China at the moment, though. So I expect that might not balance out in the same way.
So when you look at the sort of the monthly production figures, pretty much everybody is trending down at the moment because of this oversupply. But India is the one country that's shooting up. Every month, its output seems to be increasing. Indian government has really optimistic targets. 300 million tons it wants to be producing every year in 2030. So what's in just 5 years' time? Currently, we're around about sort of half that, just over half that figure. So expect them to keep producing more. Because of the sort of the scale issue, though, I'd expect that the output that they're gaining is going to be offset by declines in China. And then also places like Japan and South Korea. They've got a very well-developed steel industry, very well sort of developed economies. And they're having a lot of the same problems everybody else is. So it really is going to be a big change for where this steel is being produced in the next couple of years.
The Indians have always had ambitious targets, though.
Yeah, we talk about those often.
Yeah, I think back when I first started at MEPS 19 years ago, they always had these really high production targets, and they never hit them.
Well, even
They
if
were
they don't
always
hit,
miles below them. It was always a bit of a standing joke. Oh, look at the production targets for Indian this year. It's like, yeah, they're not going to get there, and they never did. They were always very, very much below them. So I don't expect that they will hit 300 million by 2030, and I expect that they will be significantly below that figure. But I think that the thing is that they are planning constantly to grow significantly, and it's
they'll definitely be higher than where they are now.
Yeah, and it'll be about replacing the imports, that they are currently taking in with domestic production. So it's
And those imports will be diverted somewhere else.
exactly, yeah.
So how do we expect, Kaye, in our forecasts that this balance between overcapacity and trade protection might pan out in 2026? Are we still going to feel in the US, in Europe, in parts of Asia, we're still going to feel that price pressure, or is protectionism going to start to win out?
It'll increase price disparity between the regions, certainly. The US market, we're starting to see a little bit more where the Asians are targeting the US market. So if the US prices start to increase too much, you'll start to see the Asians wanting to sell more into the US because they're not going to be able to sell as much into Europe. So the best market then, or the next market realistically for them, is the US. And there's going to be a price advantage if the prices in the US move up. So that will sort of cap the increases in the prices in the US domestic side, which is part of the reason why we don't really expect prices to move up, significantly next year in the US. But at the same time, it's going to keep a bit of a floor, well, a bit of a rise in the Asian market, because they're going to struggle on where they can sell their excess capacity in the global market, and they're going to be needing to find new markets to sell this excess steel to. They're not going to be able to sell as much to Europe. They've been struggling to sell to the US this year because the prices haven't been as strong as they have been, even with the Section 232 increases, and obviously they're not being able to compete with the 50% tariff increase. So they've had an issue with trade in other countries. And obviously if India now have got the trade protection measures there. So there's a lot of issues in Asia. So we're going to see it affecting prices and creating this price disparity between the regions.
Okay, and Stuart, I'll come to you. I think I've asked you quite a lot about Europe, but it's going to be the same sort of subject line again. In terms of the EU safeguard measures that clearly are designed to fend off this overcapacity and the downward pressure on prices that's created in recent years, do we expect that this summer's changes, the introduction of the new safeguard regime, is that going to sufficiently help raise prices and support domestic produce?
I suppose it all depends where you are in the whole supply chain. If you're a steel mill, it will definitely and greatly assist them. They'll be able to then bring back some extra capacity. I think the most difficult, if you're a stockist, you're going to get a push and pull from both sides, from your supplier and from the end customer. But definitely it's going to be felt right through that supply chain, right down to the consumer. So perhaps the one fallout is that end products will increase in cost, okay? And that will have a spin-off in other input costs. So I think that's one maybe factor that I think will arise during the course of next year. I think if you are a stockist and you have a low cost base, or you start off with a low cost base, I think they'll be smiling, and there'll be those companies that are able to take advantage of that and also make a profit. And so I think the danger is whether or not it's going to benefit Europe as a whole going forward. It will definitely put pressure on them in terms of exports, on their cost, the price that they can offer out into the export market. So that's another factor to watch. But I also just want to come back to a point you made, Kaye, with regards to China and other markets. So from a South African point of view, it's come out very clear that over this past year, there has been an increase of imports. In fact, it's just over a quarter of all steel consumed in South Africa is from China and other related Asian countries. But I think it goes further than that. If you look north of the border into sub-Saharan Africa, there's certainly a drive from China pushing additional exports into Africa. And also another case in point is that China, I wouldn't say it was secret, but definitely it was quiet for a while. They've actually built a new mill in Zimbabwe, generating over 1 million tons per annum at this stage. They're already supplying billet back into South Africa, which certain mills are buying, and because it's just at a cheaper cost. So, and I think it's not just Africa, it will be other places around the world. So yes, from a European point of view, I think that those measures, there are certain sectors that call for it, other sectors say, no, we don't want that. Is it a protectionist method that's uncompetitive? Probably, but in terms of that disparity in price, it will help certain companies and will be maybe detrimental to others.
No, it's fascinating that we've got that picture as well at MEPS, that we cover these countries through, International Steel Review, Developing Markets Steel Review, and we can see the fallout as it plays out. These new measures come in and the old capacity moves into other markets. Really interesting. Thanks for that view of Africa in particular. Really interesting, Stuart. Just to sum up, I guess, because we've summarised three key trends, I think, but we'd just like to look forward to 2026. We've already alluded to it and we've described some of the price trends in particular, but I'll just take from each of you a little snapshot of your thoughts for next year. This year seems to have been defined by uncertainty. Jon, a lot of things in the offing. What we're going to see in 2026?
Yeah, if you're saying 2025 is uncertainty, I'm going to say 2026, it's going to be a very eventful year, certainly for our European customers. We're going to have CBAM finally coming in and all the interesting talk that brings. Then we're going to have the steel safeguards that are going to be expire and be replaced. It's going to be very busy. There's going to be lots of things for them to keep up with.
Yeah, absolutely. And Kaye, I guess primarily you're going to be focused on prices, you're going to be formulating the forecasts. A lot of variables again. What are you expecting the challenges might be next year?
Challenges for the uncertainty, I think, is going to remain, at least initially. We're going to have some gradual improvement in demand, I think, in 2026. There are some risks economically through 2026. I think particularly in the US market, there are some comments coming back from some of the US market participants who have some fears. I think in particular towards the second half of 2026, our west side. We have I think some stability in some of the raw material costs, more so than we've seen in previous years. Scrap is one to watch, certainly going forward. Maybe 2026 might be a bit soon for any major price increases, but it's certainly going to be a sort of growing valuable commodity in the years ahead. 2026 could be one where it may start to become more of an interesting one to keep an eye on. And yeah, just general, I think just a general upward trend overall globally. Asia may be one of the least performing ones of the three regions that we're forecasting. And Europe, certainly the first half is going to be pretty strong. But I think the European buyers in general, once they get their head round CBAM and the CBAM charges, will return to the international market. Maybe not to the same extent that they used to, but they will want to diversify their supply chains again. The safeguard measures may complicate that a little bit, as they will be restricted more than they have been this year and in previous years. But it's one of those things. The European mills will at some point raise their prices above the point that will make purchasing from imports attractive.
Yeah.
It always happens.
Okay, Stuart, 2026, you're looking forward to interesting conversations with research partners?
Yeah, we always ask our research partners what they think is going to happen going forward and what their thoughts are and outlook. And certainly, I think by far and large, they are fairly optimistic in the sense that it won't be worse than 2025 and perhaps even better in terms of demand levels and volumes and some inquiries. I think another word that I can perhaps use is clarity. I think in terms of next year, specifically in that first 6 months and the first 2 quarters, clarity will be one of the buzzwords. I think it will come through loud and clear. And then that will just give them a bit more certainty with regards to their procurement strategies. So a good year possibly for 2026. No one's expecting a worse year.
Certainly sounds like there's potential for a little more certainty. So we'll be grateful of that and see how it affects prices. All that will be summarised in the Steel Market Reviews and will continue to be debated on the Speaking of Steel podcast. Another reminder, I guess, that people should be buying the steel price outlook if they want to see further forward than the dates that we've discussed today, forecast right through to 2030, I should say, right to the end of the decade, and a real good insight. And you can get a webinar on top now with that because we've recorded a bit of an explainer. So really interesting. Thanks, guys. Thanks for joining me. And great work in 2025. We're looking forward to the next one, aren't we?
Yeah, could be a very interesting start to 2026, I think.
Absolutely. Great stuff. Thank you.
Thank you.